We are looking at another topic in income tax called tax administration. Domestic tax administration. So we shall start with taxpayer registration. We shall talk about taxpayer registration. A person liable to pay tax should be registered with the tax authorities. A taxpayer, according to Income Tax Act, is supposed to register with the tax authorities. The taxpayer is expected to apply for registration with the authorities following the criteria given by the tax authorities. If we say tax authorities, we mean Uganda Revenue Authority, which is URA. It is a taxpayer's obligation to register because non-registration, or if you fail to register, it is punishable as per Section 52 of the Tax Procedures Code Act, stipulating a penalty for failing to apply for registration. And the taxpayer applying for registration is expected to accompany the application with evidence of the person's identity. For example, a national ID, certificate of incorporation in case it is a company, or any other document that affirm the existence and identity of any person. And the tax officers are also bound to register a person who has applied for registration if they have all that is required to be registered. However, where the tax officers find no reason to register a person who has applied, or if the person has not provided enough information, they are bound to give a written notice to that person that they cannot register him or her within 14 days after them not registering that person. And then they're also supposed to give the reason as to why they have not registered him or her. Then in a situation where the taxpayer may not have provided enough information or registration information, the commissioner may consider requesting that person to provide any further information necessary to complete the registration of that person. Where a taxpayer is successfully registered, a tax identification number or TIN is issued to that person. A TIN number or a tax identification number is a special identification to a person, and it is used for income tax purposes provided under the Income Tax Act. It is personal, like it only belongs to one person and no one else is allowed to use it. However, there are some circumstances whereby a TIN number of one person can be used by the other. And let's look at those conditions. So the only person who is allowed to use someone else's TIN number is a registered tax agent when you're an agent to the taxpayer. And in order for an agent to use someone's TIN number, the following must apply. First is that the tax agent must have written permission by the TIN number holder to use it on their behalf. Secondly is that the registered tax agent uses the TIN number only in respect of the tax affairs of the taxpayer. Like he or she uses the TIN number when he's carrying out activities for the taxpayer. Then the taxpayer should state the TIN on any return, notice, communication, or any other documents furnished, lodged, or used for tax purposes. And those are the three conditions that apply for a TIN number to be used by a registered tax agent. So a TIN number may be cancelled in any of the following circumstances. First is that if the person is deregistered for the purposes of all the tax laws, they remove you from the books. Then where a TIN has been issued to the person under an identity that is not that person's true identity, you use the fake identity, they gave you a TIN number, then later they realize that actually you are not that person. Then where the person has been previously issued with a TIN number that is still in force. When you already have a TIN number that is working. So those are the three conditions that may lead to cancellation of one's TIN number, whereby you are deregistered or there is fake identity, or you already have a TIN number.